first we will be covering the amendments which are there under direct and indirect taxes. First we will see all the amendments so that you know, I mean, of course we have discussed this amendment in our classroom, but you know these are the changes which are there, so which are normally there in this law, because the chances of asking question on amendments will be high. Then we'll start with revision. We'll start after amendments. We'll start with revision. Okay, yeah. Okay, now please note, class will be a little fast. You should be, I hope you would have studied this before. And what I'll do is I'll take up the mock test papers also. So who can watch this, sir? Who can watch this? This can be watched by CA and CS students, both of them. Both of you can watch this, because the CS, I told CS and CMA only, no? Hey, CS, no, not for CS students, okay? This can be watched by CS and CMA students, or CMA and CS students, okay? So first, amendment with respect to direct taxes, then we'll see amendments with respect to indirect taxes, direct taxes, indirect taxes. Whatever you have studied in the classroom, that is all amended only. But we are just going through once if there is any changes. In GST, there is 2 points which they have added extra. Okay, that we'll see. In GST, we have 2 points which are added extra. Now, amendments in direct taxes, I hope you all know, for your examination, the previous year is 24-25 and assessment year is what, sir? 25-26. Meaning, for those who are writing your examination till December 25, or for CA students, if you are writing examination in Jan 26, for you guys, what will be the previous year? 24-25. Assessment year will be 25-26. Now, please note, whatever you are seeing, this is not applicable. The entire marathon as well as this amendment is not applicable for those who are going to write examination from next year onwards. Next year onwards means if you are a CA student writing examination in May 26, September 26 or January 27, this is not applicable for you. And if you are a CS and CMA student writing examination in June 26 and December 26, this is not applicable to you. You don't have to watch this video. You can stop this and go do whatever you want to do in your life. Now, previous year applicable for your examination will be what, sir? Previous year applicable for your examination will be previous year 24-25 January, and assessment year will be what, sir? 25-26. Now, what do you mean by previous year? Previous year is the year in which income is earned, and assessment year is the year in which tax is paid by you. So for your examination, whatever income is earned during the period 1st April 2024 to 31st March 2025 will be applicable to you for your examination. On this, you will have to pay the taxes in assessment year. Okay. So normally previous year is a period of 12 months. However, if you have started the business in the middle of the year, or if any new source of income is generated in the middle of the year, then the previous year will be period less than 12 months. Now the tax rate for 24-25 is something which is which we have seen. Now normally in optional regime there is no change in tax rate, but in default regime there is a small change in tax rates, which we have anyways covered in the classroom. And in special tax rates also there is a change. Okay. What are optional tax rates? If you are an individual HUF, AOP, BOI, artificial judicial person, up to 2.5 lakhs, no tax. 2.5 to 5, 5%, 5 to 10, 20%, more than 10, 30%. Then if you are a senior citizen, who is a senior citizen? If you are a resident individual aged 60 years or more. Please note, you should be a resident individual aged 60 years or more. Then for you up to 3 lakhs there is no tax. 3 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%, more than 10 lakhs, 30%. And if you are a super senior citizen, please note, super senior citizen also is a resident individual. So if you are a non-resident person and if you are a more than 60 years, then you will fall under the normal category only. So if you are a super senior citizen, for you up to 5 lakhs there is no tax. 5 to 10, 20%, more than 10, 30%. This is under optional regime. Now, once your income crosses, and please note, whenever, once we start our marathon, this is just amendment, okay? So once we start our marathon, any topic you feel that I have doubt or I have questions, you can ask me over there, okay? Online students also, if you feel that anywhere I have a question or I have a doubt, you can please ask me and we'll cover that also. Yeah. When is surcharge applicable? Surcharge is applicable if your total income is more than 50 lakh rupees. But anyways, there is no change in this surcharge limit. Up to more than 50 lakhs, up to 1 crore, it is 10%, 1 to 2, 15%, 2 to 5 crores, 25%, and more than 5 crores, 37%. This is under what regime? Optional regime. Health and education cess also will have to pay up to 4% of tax. Then under 115 BAC, there is a change in tax rate applicable for them. Up to 3 lakhs, they don't have to pay any taxes. From 3 lakhs to 7 lakhs, 5%. 7 lakhs to 10 lakhs, 10%. 10 lakhs to 12 lakhs, 15%. 12 lakhs to 15 lakhs, 20%. And more than 15 lakhs, 30%. Sir, we have studied this thing only, in the classroom, sir. Yeah, but still, some students will be there who want to understand what are the only amendments. When compared to last December examination, what are the changes? When compared to last year, December 2024, June 2025, they would have not cleared, and they would have written the second group in maybe the June attempt, and now they are writing December. Therefore, for them, this will be helpful. So, surcharge will be applicable if the total income is more than 50 lakhs. So, up to more than 50 lakhs, up to 1 crore, it is 10%, 1 to 2, 15%, more than 2, it is 25%. These people don't have 115 BAC default tax regime. People don't have what, sir? They don't have 37% surcharge. Health and education cess is anyways applicable to them. Now, if you are following default tax regime, then you will not get certain benefits. And chapter wise, we'll cover this under revision. What is the amendment part is that if you are following default tax regime, standard deduction under salary you will get is 75,000 rupees, and under optional tax regime you will get normal 50,000 rupees. Now there is a change in tax rates for foreign companies. Foreign company tax rate is 35%. Foreign company tax rate is what, sir? 35%. For domestic company, the tax rate is same. Then there is a change in tax rates for capital gains, basically. Capital gain chapter, complete change in tax rate. We will see this we'll cover this in capital gain chapter. Okay, there is a complete change in tax rates for capital gain. Apart from that, for casual income 30%, online games 30%, and undisclosed income it is 60%. Now under the chapter residential status, do I have any amendments, sir? Under the chapter residential status, you don't have any amendment. There is no changes. Then, sir, what about agricultural income? Do I have any amendment or changes in agricultural income? Answer is no. So everything is same, normal only. Sir, under income from house property, now if you are a person who is following for optional regime, there is no change. Whatever you have studied is exactly same. But if you are a person who is opting for default tax regime, default tax regime means what, sir? 115 BAC. If you are a person who is opting for default tax regime, then for self-occupied property, you will not get interest deduction under section 24. Now, normally you will be knowing for self-occupied property, you get an interest deduction of, if it is deemed to be let out or let out property, then it is no limit. And then for self-occupied property, if it is for residence purpose, either it will be 30,000 or it will be 2 lakh rupees. This will not be given. No, please not. Sorry. Only this self-occupied portion will not be given if you are opting for default tax regime. Normally for LOP and DLOP, whatever interest is there, that will be allowed. Then, if you are a person who is opting for default tax regime, under the head house property, you will not get set off of losses. Normally what happens, if you remember, under set off and carry forward, current year house property loss can be adjusted with other heads. How much, sir? To a maximum extent of 2 lakh rupees. This adjustments will not be possible if you have opted for default tax regime. No set off of current year house property loss with other income if you have opted for default tax regime. And then current year house property loss cannot be carry forwarded also. You cannot set off also, and you cannot carry forward the current year house property loss. Now, apart from that, if a person is in the business of renting house property, normally the income should go under business because it is my business. If a person is in the business of renting of house property, my income should go under the head business. But what they have told is, if an assessee is in the business of renting of house property, I will see what type of house property is he renting. Meaning, what is his business? Is it renting of residential house property or renting of commercial property? If it is renting of commercial residential property, then whatever income he is going to receive, though it is his business, it will be taxable under which head, sir? House property. But if he is in the business of renting of commercial house property, then whatever income he is receiving, if it is his business of renting commercial house property, whatever income he is receiving will be taxable under the head PGBP, the business income. Then under capital gain, of course, this is the chapter where maximum changes are there, and we all know from each head of income there will be one question. Correct? From each head of income there will be one question. Of course, we'll be covering that in marathon. We'll be covering and we'll take the mock test papers also. Now, types of capital assets. We all know capital assets are divided into two types: long-term capital asset and short-term capital asset. If you transfer long-term capital asset, the gain which I get will be long-term capital gain, and if I transfer short-term capital asset, I'll get a gain called as short-term capital gain. Now, how will I come to know whether it is a long-term capital asset or a short-term capital asset? I should see period of holding. Period of holding is the date, the period from date of purchase till the date of transfer. Now, if the period of holding is more than 1, 2, or 3 years, it is long-term. If the period of holding is less than 1, 2, 3 years, it is short-term. Now, here there is a small change. Here there is a small change. What is the change, sir? If any capital asset is transferred after 23rd July 2024, the period of holding which you are going to see is only 2 years. Sir, repeat. If there is a transfer of capital asset happening after 23rd July, meaning that 3-year limit has been removed now. For 4 assets, it is 1 year only. 1 year or 12 months. Which are those items, sir? Any securities other than units which are listed on recognized stock exchange of India, or units of equity oriented mutual fund, units of business trust of India, or zero coupon bonds. On these 4 items, the period of holding is same. And for immovable property and unlisted shares, the period of holding is 2 years only. Now also it is 2 years. But for all other types of capital asset, like we have jewelry, bullion, or unlisted debentures, whatever is not covered in point number 1 and point number 2, the period of holding was 3 years. But here there is a change. They are telling if the transfer is made after 23rd July, meaning if jewelry is sold after 23rd July, I am not going to see 3 years limit for that jewelry. I will see 2 years limit for that jewelry. Okay, the period of holding is changed from 3 years to 2 years. Now, computation of capital gain also, there is a small change in computation. Please note, I'll repeat once again. I have repeated so many times. Whatever we have discussed in the classroom, that is completely amended only. That is completely amended only. We had taken amended classes only, but still, why are we watching the classes? Why are we doing this amendment, sir? So that we know what are the questions which can come in the examination, because normally they will test amendment in the examination. Okay, so once we are just briefing the amendments. Section 48, computation of capital gain. Now, in computation of capital gain, there is a small change. Normally, how do I compute the capital gain? I take full value of consideration less expenses incidental to transfer. I will get my net sale consideration. From this, I will subtract my cost of acquisition and cost of improvement. I will get my gross short-term capital gain. Gross capital gain I will get. From that, I will subtract exemptions. I will get my taxable short-term capital gain. Now, this is for short-term capital gain. Whereas in case of long-term capital gain, what happens? Instead of taking cost of acquisition and cost of improvement, I take indexed cost of acquisition and indexed cost of improvement. Correct? Normally, we take cost of acquisition, cost of improvement, but in case of long-term capital asset, we take indexed cost of acquisition and indexed cost of improvement. Now, if the capital asset is transferred after 23rd July 2024, you cannot take indexation. Even if it is long-term capital asset, you cannot take indexation. Now please note, this is a beautiful point. This is a very beautiful point, but this point will not be applicable for, there are 5 cases where transfer, normally capital gain is taxable in which year? In the year in which transfer took place. But there are 5 cases which we studied where capital gain will be taxable in the year other than the year of transfer. For example, conversion of capital asset into stock in trade, compulsory acquisition of capital asset. For them, no transfer will happen always before this date. Can I say transfer will happen always before 23rd July only? Why? Transfer is happening 10 years back, now they are paying money, 5 years back, now they are paying money. Correct? So here, Now, normally students will not make a mistake, but you should be very careful when you are doing question with respect to conversion of capital asset into stock in trade or compulsory acquisition or insurance claim received, etc. Okay. So, what is the crux? The crux is for computation of capital gain. For computation of capital gain, if it is a long-term capital gain, then we normally take indexed cost of acquisition and indexed cost of improvement. Now, I will not take index cost of acquisition and index cost of improvement for computation of capital gain. Please note, I am telling for computation of capital gain, I will not take indexation if the transfer is made on or after 23rd July 2024. Now, please note, whatever I am telling, I will reverse this option. I mean, I will tell something against this point after 2 minutes only. Normally, what should I do, sir? For computation of capital gain, if the transfer is made on or after 23rd July 2024, can I say whether it is long-term capital gain or short-term capital gain? I will not get any indexation. No indexation is for what purpose, sir? For computing the gain. For computing the gain, there is no indexation. There is no indexation. Okay, but amendment applicable for no indexation benefit will be given for transfer of capital asset on or after 23rd July. Now, this point which I have told will change for one person. That is not for computation of capital gain. Okay, now we will see what is the tax rate. Now, what are we going to see, sir? What is the tax rate in case of capital gain? So, there is a complete change in tax rate. Now, for checking what is the tax rate applicable for capital gain, I should see when the transfer has been made. So, if the transfer of capital asset is made before 23rd July 2024, if the transfer is happening before 23rd July, what is the tax rate we are discussing? What are we discussing? Are we discussing how to compute the capital gain? No, sir. We are just seeing how to compute the tax rate, how to compute the tax amount. So, the capital gain can be long-term or short-term. If it is a long-term capital gain, it is taxable under two sections, either 112 or 112A. Normally, it is taxable under 112. Under 112A, only 3 items are taxable. Only 3 items are there which are taxable under 112A. So, if the transfer is before 23rd July and if it is a long-term capital asset taxable under section 112, then the tax rate will be 20%. Now, because the transfer is happening before 23rd July, I will also get indexation benefit for computing the gain amount. Okay. If the transfer is happening before 23rd July and if the capital gain is taxable under 112A, then the tax rate will be 10% for the gain in excess of 1 lakh, meaning up to 1 lakh rupees of gain it is not taxable, but more than 1 lakh it will be taxable at 10%. And for this item I will not get indexation benefit. Now please note, though we say for gain in excess of 1 lakh only you will have to pay the taxes, but because this will fall, can I say in the previous year 24-25, I will take the limit of 1,25,000. Why sir? I'll tell this point. Okay, remember this point. I'll come back to this point. Anyways, I'll talk about the capital gain for short-term capital gain. Tax rate. What is the tax rate? Short-term capital gain is taxable under 111 and 111A. If it is short-term capital gain under section 111, then taxable at slab rate, whatever slab rates are there. And if it is 111A, 15%. It is 15%. Now, sir, what if the capital asset is transferred on or after 23rd July 2024, sir? If the capital asset is transferred on or after 23rd July, if it is a short-term capital gain, same it will be taxable under 111 or 111A. If it is 111 slab rate, 111A 20%. If it is a long-term capital gain, for which the transfer is made on or after 23rd July, then again it will be taxable under 112 or 112A. Correct? Now here, if it is taxable under 112, I should see what is the asset which is getting transferred. What is the asset which is getting transferred? Sir, that asset which is getting transferred is an immovable property. If it is an immovable property transferred by an individual or an HUF, for computing capital gain, no problem. Just compute without indexation. But for computing the tax amount, take 20% with indexation. Meaning compute the gain by taking indexation and take 20%, or take 12.5% without indexation. Meaning find the gain amount with indexation and take 20% of that. Find the gain amount without indexation and take 12.5% of that. Okay, and whichever is less in this will be payable. Please note, can I say for computing the gain for transfer made after this date, for computing gain there is no change. Meaning you will have to compute without indexation benefit only. Only when you are computing the tax amount for an individual or an HUF if he has sold immovable property. So condition is individual HUF, immovable property, tax amount. Okay. So then we will take 20% with indexation and 12.5% without indexation. So question you should read very clearly whether they are asking you to find the capital gain amount or tax liability. If they are asking tax amount, then you should find with and without indexation, both. Sir, if you are not an individual or HUF, sir, then for you it will be normal, without indexation 12.5%. And if it is any other long-term capital asset, same 12.5% and no indexation benefit will be given. Now, if it is a long-term capital asset taxable under 112A, it will be taxable at 12.5% and only gain in excess of 1,25,000 will be taxable. And here you will not get any indexation benefit. Now, why did I tell over here the limit is 1,25,000? Because in both the cases, this transfer will be made in which year? 24-25 only. Meaning, few transfers are made before 23rd July. Few transfers are made after 23rd July. So what should I see, sir? I should see 1 lakh limit or 1,25,000 limit. For the entire year, you should see what limit, sir? Higher limit, because that is more beneficial to you. Correct? Now note, very important note. Remember this note? Note, immovable property. Above is applicable only for computation of tax liability on capital gain and not for computation of gain amount. That is, if an individual or an HUF transfers immovable property on or after 23rd July, then capital gain shall be computed without indexation. However, tax will be taken 20% with indexation or 12.5. And we'll just see one question. See this question. Now they are telling, in this question, they are telling find the amount of capital gain chargeable to tax. Now this is a question on long-term capital gain. So they have just asked you to find the capital gain taxable. Okay. Now what is the date of transfer in this question? The date of transfer in this question is 23rd of December 2024 or 5 it should be 2024. Yeah. 23rd December 2024 is the date of transfer. So can I say it is after 23rd July 2024? Correct? And here what has he sold, sir? Gold. What has he sold? Gold. Now, therefore, capital asset is not an immovable property. So what will you write? Whenever there is one question only will come from capital gain. What you should write first? See the date of transfer and what is the type of capital asset. Now, if the date of transfer is before, irrespective of what is the capital asset, indexation will be available. If the date of transfer is after 23rd July, now if the capital asset is anything, I don't care, computing will not change. Computing will not change. Computation will be full value of consideration less expenses, and cost of acquisition you will take whatever is the actual cost of that asset, which is 4 lakh rupees. You will get your capital gain amount. Okay. Now, and you should write a note. Since the transfer is after 23rd July, no indexation benefit is available. Now, if tax amount they are asking you, you should find the tax amount by taking without indexation gain, and tax rate will be 12.5%. Now see this question. This is important question. Mr. Champak purchases a house property of 3 lakhs on 1989. The following expenses are incurred by him and for making additions. He constructed first floor in 92, second floor in 2003, and 2009 reconstruction was done. Fair market value is 9,50,000 on 1st of April 2001. The house property sold by Champak on 10th of December 24 for 85 lakh rupees, and expenses incurred was 60,000. Now, can I say first of all transfer is after 23rd July? So what should come, and what is the item transferred? Can I say it is an immovable property? So can I say computation of capital gain should be done with or without indexation? Without indexation. Computation of capital gain should be done without indexation. Now here they are told to compute the capital gain. So this computation part I will do without taking indexation. And tax liability for the assessment. Because they have asked us the tax liability also, I have to recompute the capital gain with indexation. So first what will I do, sir? I'll compute the capital gain. Without indexation only we should compute. So whatever is the full value of consideration, let's expenses, you will get your net sale consideration, subtract your cost of acquisition and cost of improvement. And we know that cost of improvement before 1st of April 2001 should not be taken. Anyways, that we will cover under marathon. So long-term capital gain will be how much, sir? 66,70,000. This is, can I say without indexation I have found this? Correct, no? So gain should always be computed without indexation. Now, if they ask you to find the tax, I will have to recompute this gain. Whatever gain is there, I'll have to recompute. I am recomputing this gain only for tax purpose. What am I writing? Capital gain with indexation only for tax purpose. So I'm just recomputing the same capital gain, but by taking indexation benefit. Now, when I pay the taxes, I should pay 12.5% without indexation, 20% with indexation, and whichever is less, 8,33,000 or 5,03,000, whichever is less is the amount of capital gain which I have to pay. You okay, not okay? Now, we discussed this Simbu Nayantara or Rakshit Shetty and what's Rashmika, correct? No. In that case, if you are gifting a capital asset, we saw that gifting, no transfer cases, cost to previous owner, something like this we take, correct? No. So now this gift provision is applicable only if the property is gifted by an individual or an HUF. If the capital asset is gifted by an individual or an HUF, only then that gift provision is applicable. Whatever gift provision we saw, that is applicable only for individual and HUF. Meaning, only if individual and HUF is giving a gift, the gift provision will be applied. That Simbu Nayantara case will be applicable. If any other person is gifting, no transfer case won't apply. It is a transfer. Now, normally we know indexation benefit only for Devgans was not available. If Devgans are transferred before 23rd July, indexation benefit is not available for Devgans. Before 23rd July also indexation is not available. What is Devgans, sir? Debentures, equity shares listed on recognized stock exchange of India, virtual digital assets, global deposit receipts, non-resident for that computation of gain in foreign currency and slum sale. But if the transfer is made 23rd July, on or after 23rd July, you will not get indexation at all for any type of capital asset. Then a small new section, section 50AA says, there is a small change in this which says, if there are these items, for these items, whatever is the period of holding, it does not matter. Capital gain will always be short-term capital gain. Capital gain in case of following assets will always be short-term capital gain, irrespective of the period of holding. Even if it is held for 5 years, 20 years, specified mutual fund, market-linked debentures, unlisted bonds, or unlisted debentures transferred or redeemed on or after 23rd July. And no indexation, of course, will be available because the gain will always be short term. Then, sir, in income from other sources, is there any change? Yes, a new section has been added under deemed dividend called as section 2, clause 22, subclause F, and which is about buyback of shares. And exemption for family pension. For family pension, if you remember, family pension is taxable under other sources. Now, family pension, whosever hands you are taxing, that person will get an exemption. That exemption is 1/3 of family pension or 15,000 rupees. This is the normal provision. But if you are a person who is opting for 115 BSc, this limit has been increased from 15,000 to 25,000. Okay, so if you are a person who is opting for 115 BSc, this is important for MCQ, somewhere they can ask you or something. Okay, the assessee opts for 115 BSc 1/3 of family pension or 25,000, whichever is less, will be what? The exempt. Now we'll see buyback. Taxation of buyback of shares. Now, if the buyback is happening before 1st of October, which is nothing but up to 30th September 2024, then in the hands of company it was taxable. If the buyback is happening before what date, sir? On or before 30th September, then it was taxable in the hands of company. Why? Because company is buying it back. So what was the rate at which it was taxable, sir? It was taxable at whatever the price the company is buying it, less whatever the price the company has issued those shares for. So it will be taxable either at buyback price or issue price. Whatever difference is there, that is the taxable amount. Okay, buyback price or issue price, whatever difference is there, that is the taxable amount. But in case of shareholders, it was exempt. If the buyback is happening before 30th of September, it was exempt in the hands of shareholder. It was exempt in the hands of shareholder. However, now they have changed. They have done ulta. Tax treatment if buyback is on or after 1st of October 2024. If the buyback is happening on 1st of October or anytime after 1st of October, what the new law says is, in the hands of company, there will be no tax treatment. In the hands of company, I'm not going to tax it at all. In the hands of company, there will be no tax treatments. In the hands of company, I'm not going to tax. And in the hands of shareholder, I'm going to call it as deemed dividend. What will be called as deemed dividend? Whatever amount is received by him. See, when the company is going to buy back, the company is going to pay some money. That money which is received by you, what is that money which is received? Number of shares which is bought back by the company into buyback price per share. So whatever amount is received by you, that entire amount, the total buyback price will be treated as deemed dividend under section 222F, and it will be taxable in the hands of shareholder under income from other sources in the year when the buyback is happening. Sir, one second. Sir, if it is taxable under other sources, but sir, I would have purchased the shares. No, sir. I would have purchased the shares and now the shares are taken back by the company. So, sir, it should be treated as transfer. No, sir. So, capital gain should come. No, sir. Why this income from other sources is coming? Now the law has been changed. What is the law telling? Whatever amount you receive, the total amount will be taxable as deemed dividend. It will be treated as deemed dividend and it will be taxable under income from other sources. Whereas in capital gain computation, of course, capital gain will be there because you would have purchased the shares. For capital gain computation, take full value of consideration to be equal to 0. Take full value of consideration to be equal to 0, subtract expenses, you will get net sale consideration, subtract your cost, you will get your loss. Now this full value of consideration should always be taken as 0 if buyback is on or after 23rd or 1st of October 2024. Okay, full value of consideration should be taken 0. So basically this is the change. And I think we have covered the questions also. In salary chapter, is there any change, sir? There is no change. Only one thing is changed. Standard deduction. Standard deduction for whom? Normally standard deduction which you get, standard deduction. You get standard deduction under section 16 clause 1A. It is available to all types of employee. Meaning from your gross salary, you subtract something. Deduction. That deduction is your standard deduction. It is available to all types of employees. The amount of deduction will be, if you are a person who is paying tax under optional tax regime, whatever salary is there, or 50,000 rupees in a year per annum, whichever is less. But if you are a person who is opting for default tax regime, then whatever salary is there, or 75,000 rupees. So instead of 50,000 for you default tax regime, it will be 75,000 rupees, whichever is less. Sir, what if I am working at more than one place? Will I get standard deduction, sir? Only once. Standard deduction will be given only once. And entertainment allowances is not available for default tax regime. Professional tax deduction also is not available for default tax. So there is this question wherein computation of gross salary will not change. But whereas while taking the deductions For optional regime, I will take all the deductions and stand deduction will be restricted to 50,000. And for default regime, I'll take only stand deduction. Other deductions will not be taken by me. Sir, in capital gain, is there any changes, sir? Only small change is there in capital gain. If you remember, section 36 is there, 36(1), which talks about admissible expenses. Expenses which are specifically allowed to be taken by you. So these admissible expenses which are there, in that we have studied one point called as employee ka contribution to what? Employee ka contribution to 80CCD pension fund. In this fund, if the employee is contributing, he will get deduction under 80CCD. Now, employer is also contributing to this fund. So, employer, for me as a company, I am also contributing, which for employee, it will be treated as an income, and deduction will be allowed under section 80CCD 2. But for me, in the sense I am an employer. If I am contributing the money in this fund, it is an expenses for me. I am paying salary to that employee and I am also making a contribution to this fund. That means it is an expenses for me. Now, because it is an expenses for me, lawmaker says you can claim the deduction of that expenses while preparing or computing your business income. So when you compute your business income, you claim the deduction of these expenses. How much can you compute the expenses deduction, sir? Up to 14% of salary. How much, sir? Up to 14% of salary. Over here, salary means basic plus DA in terms. And another change, which is an important change. I mean, they have not asked a question on this point, so it is important. So another important change is what, sir? Limit for computing remuneration to partners. Okay. Now, for computation of remuneration to partners, we will take into consideration the book profit. Book profit. So how do we compute, sir? First, we need to find book profit. What is book profit? Book profit is the profit of the firm before remuneration. Book profit is the profit of the firm computed normally before remuneration. So up to 6 lakhs of book profit, the remuneration which you can pay, meaning if your book profit is 1 lakh, 2 lakh, 5 lakh, 6 lakhs, up to 6 lakh rupees, how much remuneration can you pay? 90% of book profit or 3 lakh rupees, whichever is higher. For any amount more than that, if my book profit is, let us say, 9 lakh rupees, then for 6 lakhs, I will follow this. And for remaining 3 lakhs, I'll take balance book profit into 60%. Okay. So for example, if it is 9 lakh, 6 lakhs into 90%, which is 5 lakh 40,000, or 3 lakhs, and 3 lakhs, which is the excess amount, into 60%. So total I can give is 7 lakh 20,000. Under deduction chapter, is there any change, sir? Under deduction chapter, 80CCD pension fund, whatever changes is there under business chapter, same changes is there over here also. In between, sir, you have left chapter, sir. Which chapter did I leave? Set off carry forward. Only one change is there with respect to house property, which I have told you. And then clubbing of income, no change. So for deduction for employer contribution to 80CCD pension fund, what do we do? Normally employer ka contribution, we add it to the salary of employee first, and then we allow as deduction. This limit was 10% before. Now the limit has been increased to 14%. Please note, 14% limit is applicable only for employer ka contribution. 14% of salary, basic pay plus DA in terms. Now, apart from this, one more change which is there is in the TDS rates. TDS rates has been changed in some cases. Specific amendment to certain TDS sections with effect from 1st of October 2024. This change is from which date, sir? 1st October 2024. Section 193, TDS on interest for floating rate saving bonds, deductible only if the amount exceeds 10,000 rupees. So before the limit was 5,000, now they have increased the limit to 10,000 rupees. 194C, amount received on buyback of shares is now treated as dividend and is subject to TDS. We have seen that it is treated as deemed dividend, correct? 194C, clarification that payment covered under section 194J are not treated as work under section 194C. So normally 194C talks about contract. 194J talks about professional services. So whatever is covered under 194J, 5 items are covered under 194J. They should not be taken under contract. See, because under 194J the TDS rate is 10% and 194C the TDS rate is only 2%. So many people, what they'll do is instead of deducting 10%, they want to deduct only 2%. So they will consider under 194C. 194X F section is now removed, and 194IA, if in case of multiple transferors or transferee, TDS is deductible on aggregate consideration amount paid by all transferees to all transferors. What is this point talking about? Now, whenever you sell an immovable property, TDS is applicable. If the sale value is more than 50 lakh rupees, TDS is applicable at 1%. Sir, what if the person who is selling is more than 1%, sir? What if the person who is selling is more than 1%, or what if the person who is purchasing is more than 1%, sir? Lawmaker says no problem. The person who is selling or the person who is purchasing, if it is more than 1%, then also TDS is deductible. TDS is deductible. Now, what is the? There is a change in TDS rate with effect from 1st of October 2024. So I have given before what was the rate, after what is the new rate now. 194DA. 194DA is if your life insurance policy is maturing, you get some money. So it was 5%, now it is 2%. Commission on sale of lottery tickets is now reduced to 2%. Normal commission which you are paying to your, let us say I have a agent in my Priya sarees. So whatever commission I am paying them, it is reduced to 2%. Rent paid by individual, if it is more than 50,000 rupees, you have to pay TDS at 5%. Now it is reduced to 2%. Professional fee or contract paid by individual or an HUF, if the price is more than 50 lakhs, you have to deduct 5% TDS. Now it is reduced to 2%. And for e-commerce transaction, the TDS rate was 1%. Now it is 0.1%. Under TCS also there is a small change in rates. Sale of motor vehicle whose value is more than 10 lakh rupees. If the who has to collect the taxes? Seller from the buyer. What is the rate at which they have to collect? 1% of sale consideration. Whatever the price, sale price is there, 1%. Now, who are exempted? In which case it is not collected, sir? If you are central government or state government, if the person who is buying the car is central government, state government, or an embassy or local authority or public sector undertaking. And this applies only for retail sale. This is the amendment, meaning the problem was now sale of car manufacturer will sell it to car dealer will sell it to us. The car dealer selling it to us, there is a TCS applicable at 1%. Car dealer is purchasing from the manufacturer. So should they also collect the taxes, sir? Lawmaker says no, there is no. Applies only for retail sale, not for manufacturer to dealer. That sale is not covered over here. And from 1st January 2025, the scope is expanded to cover some notified goods also whose value is 10 lakh rupees. So they'll tell you what are those notified goods. Foreign remittance under LRS or foreign remittance under LRS or purchase of overseas tour package. Meaning you are going outside India, you are going to take tour packages. Correct. So for that, or you are remitting money outside India under liberalized remittance scheme. So if the authorized dealer who is giving the money, or a tour operator who is booking the package for you, if he does that, person permitting. So what is the limit, TDS limit now? If you are purchasing tour packages, whatever amount you are paying, for up to 7 lakh rupees, if the amount is 5%, if the amount is more than 7 lakh rupees, then 20% TCS is applicable. If you are giving money outside India, for let us say Janvi has a daughter outside India, and for that Janvi's daughter, he has to transfer money for her education purpose or for her medical treatment purpose. Now in such cases, if the amount is up to 7 lakh rupees, if he is transferring, no problem. If it is more than 7 lakh rupees, 5% TCS. Education loan from financial institution, if you are taking, if it is more than 7 lakhs, then only you have to pay TCS of 0.5%. And for all other purpose, if it is more than 7 lakhs, 20% TCS is applicable. In amendment procedure, only one small change is with respect to quoting PAN. Now, normally quoting of PAN with Aadhaar number, quoting of Aadhaar while filing your income tax return was compulsory, and PAN and Aadhaar should be linked. Now, before what we used to study was, if you don't have a PAN, you can quote your Aadhaar, if you don't have an Aadhaar, you can quote your Aadhaar enrollment number. Now this has been removed. If you are filing your income tax return after this date, 1st of October 2024, compulsorily you should quote your Aadhaar number. If you don't quote your Aadhaar number, your return will be treated as useless. Okay, so that change is there. These are the changes with respect to income tax or direct tax. I mean, not that changes are there, something which we have already covered. But yeah, one revision is done. Now we'll see what are the amendments in indirect taxes. Clarification on taxability. So indirect taxes, more than amendments, there are clarifications. More clarifications will be there. Clarification on taxability of ESOP, ESPP, RSU, meaning employee stock option or employee stock purchase plan or restricted stock units by company to its employee through overseas holding company. So the question over here was, let us say there is a company called as Coca-Cola Inc., which is in USA. Now Coca-Cola has its employees in India also. Okay, so here there may be a Coca-Cola company in India also. Okay, now these employees will get something called as ESOP. So for the ESOP which they are getting from Coca-Cola Inc., okay, they are not getting ESOP from the company in India because the company in India is not listed. ESOP they are getting from the company which is there outside India. So the question is whether the ESOP which these people have got, whether this is treated as importation of services and whether RCM is applicable on this transaction or not. Lawmakers told ESOP means what? Shares are given to employees. What are shares? Are they goods or services? They are neither goods nor services. When something is not goods also, not services also, the question of supply only will not come. The question of GST only will not come. So what is there told, sir? The reimbursement from Indian subsidiary company to holding company, when it is done on cost to cost basis, it is not subject to GST. Securities or shares are neither treated as goods nor treated as services under GST. Then clarification whether GST is payable by insurance company on salvage value enmarked in claim assessment of the damage caused to motor vehicle. Now what is this salvage value, sir? For example, let us say there is a car. Bike. One of our friend met with accident before my class. Correct? No, bike was completely damaged. Nothing happened to that person. But the person who was sitting with them, Kunte Bille, they used to come in the classroom. Okay. Now, so the bike was damaged. Correct? No? So the bike was damaged. When the bike was completely damaged, what will that person do now? He'll give his bike to the service center and he will claim insurance. So did you claim insurance?
Not that much.
Oh, not that much damage. Damage on person was more. Okay. Let us say he claimed insurance. Now, you have two options for taking insurance. Now, for example, we'll ignore the options. We'll read that point later. Now, what happens is, let us say his entire front wheel got damaged and that, what is that called? Handlebar, that suspension. So that is completely damaged. So that is required to be replaced now. Okay. So the replacement cost is around 30,000. Now the insurance company will definitely replace it. But the question is, what will happen to that tire, old tire which is taken, that suspension bar or the handle bar which is there, that insurance company will take. Now the question is, this item which insurance company has taken on that, is GST applicable or not? These items which insurance company has taken on that, is GST applicable or not? So here they have told it depends on type of insurance you have. Insurance company insures the vehicle for any damages, in return charges premium. Correct? This is only what happens. Insurance company will take care of your damages, but they'll charge from you premium. The responsibility of insurance company is either to repair the damaged vehicle or to compensate the insured as per the term of policy. So what does insurance company do? Either they will repair or they will give you the money for whatever expenses is incurred by you. What is the impact of GST on this? What is GST impact on deduction of salvage value or full insured declared value settlement without deducting salvage value? Deduction of salvage value. Deduction of salvage value means whatever is recovered, that value is deduction. When the claim is settled after deducting the salvage value, the ownership of the salvage value remains with the insured only. Meaning, if the company says, you only keep this whatever item is damaged item, you only keep, I will reduce the price for that money and give you the balance amount. Okay? The salvage does not become the property of the insurance company, and the deduction of salvage value from the claim is not considered as supply. Hence, insurance company is not liable to pay GST on the same. So, what is the first point telling? When you are deducting the salvage value, when this amount, when this item which is there, no, this item is not taken by insurance company. Insurance company says, see sir, I am going to give you claim of 30,000. Now this item which is there, I don't want, you only keep. Now because you are keeping this item, I am going to reduce 3,000 rupees. Because if you sell it in the market as a scrap, you will get 3,000 rupees. So now how much will I give you? 27,000 rupees only. So now the question is, on this 3,000, is GST applicable or not? Answer is no, because the insurance company never took it from you. Right. Full insured declared value. If it is full insured declared value, yes, GST will be applicable on salvage value also, because insurance company is taking the damaged product also. Under charge under GST, RCM, charge under GST section 9. Under charge under GST, there is one new point added called as metal scrap, which is sold by unregistered person to a registered person. So this is for goods. Now if you remember, goods are taxable under reverse charge section 9 subsection 3. Now if metal scrap is sold by whom? Unregistered person to a registered person. The registered person has to pay the tax under reverse charge. Similarly, there is a service also which has been added, 5B. Services by way of renting of any immovable property other than residential dwelling by an unregistered person to registered person. So if you are renting any type of, please note, we have studied one more point similar to this called as services of renting of residential dwelling to a registered person. That we have studied, correct? Now this is not that point. This says services by way of renting of any immovable property other than residential dwelling by unregistered person to a registered person. The registered person has to pay the taxes under reverse charge. See please, if you are renting residential dwelling, then also RCM is applicable. But if you are renting anything other than residential dwelling, also RCM is applicable. Now in case of place of supply, there is a section called as section 10.1 CA. This is also newly added section only. So 10.1 CA talks about what, sir? If you are supplying to unregistered person. If you are making a supply to an unregistered person, I will check whether address of that unregistered person is available with you, or have you recorded the address on the invoice, or address of that unregistered person is not available with you, or you have not recorded the address of that unregistered person on the invoice. If the address of that unregistered person is recorded on the invoice, if the address is recorded on the invoice, place of supply will be what? Whatever address is recorded on the invoice. If address is not recorded on the invoice, the place of supply will be location of supply. If you remember, we discussed a point before this. We have a section called as 10.1c, which says if you come to Priya Sarees and if you purchase a sari, what is the place of supply? Location of Priya Sarees, which is nothing but location of supplier. Why? Because there is no movement of goods happening. Correct? 10.1c talks about that. But if it is sold to an unregistered person, okay, now no movement is happening. He is coming to Priya Sarees, and he says, sir, I want the sari, I want an invoice, and give me the invoice with my address on this. Okay, please give me the invoice with my address. If I give the invoice with address, then the place of supply will be whatever address is mentioned. If I give it without address, the place of supply will be my location. Now, this services in exemptions chapter, services by way of renting of residential dwelling for residential use, except where it is rented to a registered person, is taxable, is exempt. Sorry, it is exempt. This service is exempt when the recipient is unregistered person. Correct? Now here they have given a clarification. What is that explanation, sir? Nothing contained in this entry shall apply to an accommodation for students in students' residence or accommodation services provided by hostel, camps, paying guest accommodations like. Meaning this exemption will not be applicable for PG where you are staying, for the hostel which is given to you. Those people are supposed to charge GST. Students' residence refers to accommodation provided to students specifically. It includes student hostel, student apartment, university or college dormitories or office off-campus student housing or similar living. Hey, please note, these places where students are living, are they not residential place for students? They are the place where they are staying, right? They are staying, but still they are telling it is taxable. Students provided by services provided by educational institute, including housing as a composite supply, is exempt. So if it is a boarding school, then of course it is exempt by, it is covered under services given by educational institution. However, if they are giving separately hostel facilities, many schools and colleges do that. For that, it is taxable. Supply of accommodation services having value of supply less than 20,000 rupees per person per month. If it is provided for a minimum period of 90 days, then it will be exempt. So if you are giving something, a house on rent to someone, or you are giving any hotel room on rent to someone where the number of months for number of days you have rented is more than 90 days and monthly you are charging up to 20,000 rupees only, then that services which is given by you will be exempt. Education as a part of approved vocational education courses. Now, approved vocational courses includes National Council of Vocational Educational Training. Now, before this was called as National Council of Vocational Training. Now it is called as what, sir? National Council of Vocational Education and Training. So services given by, if they write NCVT or NCEVT, it is exempt. Then affiliation services by central or state board or council or other similar bodies to schools established or owned and controlled by central government, state government, unitary local authority, government authority or government entity. Affiliation services means, if you see wherever you have studied, that school is affiliated to Bangalore University, affiliated to CBSE. That means the school which a person is running, that school has to take license. Okay, from whom, sir? CBSE or your state board. So for that they are going to charge money. Who is going to charge money? Bangalore University is going to charge money. Karnataka State Board is going to charge money. CBSE board is going to charge money. So for that money GST is applicable. If that license is given to central government ka school, state government ka school, local authority ka school, government authority ka school, then exemption is there. Now, if you go to railway station, you can purchase you are supposed to purchase platform ticket. If you are just roaming around over there, okay, 10 rupees you will have to pay for that. On that GST is not applicable. Say today will become coolie one day. Facility of retiring room or waiting room. Some people do that. They know that exam is there in December. Okay, December month exam is there. Now examination, once they'll just go, okay, one time we'll go and check how it works. Coolie people, how they are working. One day they'll spend time over there. So that if in December month I know that my examination I have not written well, then I can anyways come here. So you are going to see your future. Sale of platform tickets or facility of retiring rooms, waiting rooms, clock rooms are there, battery operated car vehicles are there. For all these things there is no GST applicable. Then one division of Indian Railway is giving services to another division, then also GST is not applicable. Services provided by special purpose vehicle to Ministry of Railway by way of allowing Ministry of Railway to use infrastructure built and owned by them during the concession period against a consideration, and the services of maintenance supplied by Indian Railway to special purpose vehicle in relation to the said infrastructure built and owned by special purpose vehicle for that concessional period with against a consideration. So basically SPV has been created for construction of this. See, now what government is doing is everything they are giving on contract only to someone. Whatever work they are doing, they are giving on contract to someone. So a special purpose vehicle is created. Special purpose vehicle is like a company only. Okay, that you will understand in your taxation subject final. Okay, it is like a company only. So that company is building, let us say, the railway tracks and all, and now Indian Railway is using that. So for that, whatever money is paid by them, there is no GST applicable. Services by way of providing meter equipment on rent, testing of meters, releasing electricity connections, or shifting of meters, service lines, issuing duplicate bills, which are incidental or ancillary for transmission and distribution of electricity provided by electricity transmission distribution utility to consumers. For example, normally we have studied transmission and distribution of electricity is exempt. Our here Bescom is transmitting electricity to our house, distributing the electricity over here. That services is exempt. Okay, on that GST will not be levied. Now the question is, sir, what about that meter board which they are fixing? Sometimes when the transformer near your house is damaged, they'll come and fix that. They may take some money also from you. You are asking for a duplicate bill, they'll charge 10 rupees for that. Sir, is these services exempt, sir? Normally these services were taxable. Now it is exempt. The input tax credit chapter, there is a section called as section 16 subsection 6 added. A new section has been added called as section 16 subsection 6. Now what is this section 16 subsection 6 telling? Do you know section 16 subsection 4 is there? Which talks about last day to take input tax credit. What is the last day to take input tax credit? 30th November of next financial year, or date of filing annual return, whichever is later. Correct. This is the normally the last date to take input tax credit. Now this date which is there will not be considered if your registration has been cancelled by the officer and later he is revoking it back. So where the registration of a registered person is cancelled under section 29 and subsequently it is revoked by an order. First he has cancelled, go away, and now he is giving it back. He is revoking it back. He is telling, I'm sorry, I cancelled it. Now in such cases, for you the last date for taking input tax credit will be, for you the last, AC is problem. For you the last date for taking input tax credit will be what, sir? 30th November or date of filing annual return, whichever is earlier. Now compare that with 30 days from the date of revocation order. 30 days from the date of revocation order, whichever is. Now you compare the normal due date as per 16(4). Take whichever is earlier of that and compare that with whatever date the revocation is over. Revocation means whatever date he has told that it is cancelled, from there you take 30 days. Now 16(4) ka date or 30 days from the date of revocation order, whichever is later, is the last date for taking input tax credit. Clarification on time limit for availing input tax credit under section 16(4) for RCM supplies received from unregistered person on which tax is paid under RCM. Now is the time limit of 16(4) applicable for RCM supply? Is the time limit of 16(4) applicable for RCM supply? Answer is no. Okay, because see, RCM, who makes the payment? I only have to pay the taxes. As soon as I pay the taxes, I can claim the input tax credit, and I only have to issue the invoice also. Now on demo vehicles, if you go to car showrooms, you will see that there are demo vehicles. On the demo vehicles, can I take input tax credit? If you remember, we have studied one point that you cannot take input tax credit on goods which are supplied free of cost or which are given as free samples. It is ineligible. So these demo vehicles, can I take input tax credit, sir?
Used for business purpose.
Yeah, it is used for business purpose. But it is a demo vehicle. They are not selling it. Can I take input tax credit? For example, in Priya sarees, we have a saree which if a customer says that I want to try this saree, many shops, if you go shirt, if you want to try, they'll say, sir, don't try white shirt, you try this shirt. Correct. Yeah. So now the question is, he is having one shirt of all the sizes: S, small size, medium size, large size, XL size, etc. So the question is, I am wearing that shirt. They are using that shirt for demo. Now the question is GST applicable or not? On demo, so on the GST, Andre, can I take input tax rate? Because I would have paid taxes on the demo shirts, whatever it is. Can I take input tax rate? Can I take input tax rate? Lawmaker says yes, the ITC is available. ITC on demo vehicles is not blocked because it is not something which you are giving to someone for free. It is used in the course of business. Okay, many, like for example, in showrooms, if you go, the AC which is installed over there, that is a demo AC only. Like if you go to a mobile store, the mobile which are kept over there, they are mobile demo mobiles only. Registration chapter. In registration chapter, person making only RCM supplies are exempted from taking registration. This is something which we know. If you are a person who is making only exempt supply, you don't have to take registration. Right. Cancellation of registration by proper officer in his own motion. Now we saw that section 29(2) talks about the cases where officer has the power to cancel my registration. If I have taken registration by fraud, I am not filing my returns. There are two more points added. If the person, two additional clauses have been added where a proper officer may cancel the registration of a person. If he has failed to file returns due between the order of cancellation and revocation of registration within 30 days of revocation order. See, normally revocation is done within 30 days. You are required, revocation, you are applying, officer cancelled the registration, you have applied for revocation, now that revocation order is given. Now for all the period before the revocation, you have to file the returns. That return should be filed within 30 days. If it is not filed within 30 days, officer has the power to cancel the registration. Or if the cancellation was retrospective, failed to file the returns from the date of order of cancellation and the date of revocation of cancellation. Payment of taxes, manner of calculating interest for delay in payment of taxes. Interest for delay in payment of taxes, we know that interest will be calculated on what amount? Net tax amount payable in cash. Net tax amount payable in cash means what, sir? Whatever output tax liability is there, subtract input tax rate, whatever difference is there, on that amount you have to calculate the interest. Okay, this is the amount which you have to pay in cash. On this amount you have to calculate interest. Now here, if you remember, we discussed one more point. If I have not considered the amount in the return, see, two things are there. I was supposed to file the return for the month of September. I did not file it within the due date. So I am paying interest for delay in payment of tax. Why is there a delay in payment of tax? Because there is a delay in filing of returns. So belated returns. Now in this case, you pay interest only on the net amount payable in cash. Whereas for September month return, I have filed the return within the due date. But what I have done is, I have reduced my tax liability from 20,000 to 12,000 rupees only. Meaning I have cheated government by 8,000 rupees. Now this cheating can be genuine cheating, meaning genuinely I have cheated government, or by mistake I have not taken, meaning instead of taking 20,000 I took only 12,000. But still I have filed my return within the due date and this amount was not considered in the return. Now though I can pay this amount through ITC, because this item was found later by me, I'll have to pay tax on this item on full amount. Normally, if the return is filed late by you, net amount only I'll pay interest. If the amount is not considered by you in the return, full amount. In marathon, we'll see that question. Now in TDS TCS topic, I think TDS TCS topic is not there at all for you guys. So can you ignore this point? Apart from that, new item which has been added. You remember negative list we studied? Negative list, something like this. Schedule number 3, chapter number 1. We saw that services given by employee to the employer in the course of employment, funeral, actionable claims, they are all not a supply. Correct? No. Now here they have added 2 more items. Warehouse sales we have studied. Correct? No, we have studied all those things. Here they have added 2 more items. Services given by co-insurance, services of co-insurance or reinsurance not treated as supply. Now what is happening over here? What does many company do? There is an insurance company, let us say, you know, this airline accident happened. This is Air India. Air India has taken insurance on that aeroplane. From whom they have taken, sir? They have taken the insurance from Tata AIG. Okay, they have taken the insurance from Tata AIG. Now Tata AIG further took this insurance from another company. Okay, they took further they took this insurance from another company, foreign company, let us say foreign insurance company. Okay, now what is happening over here? What is happening over here? Okay, this is a case of reinsurance. This is point number 2. Point number 2. I'll just discuss about point number 1 first. Sometimes what happens is, okay, let us say Priya sarees. I'll just take that example later. Priya sarees. I have stock. Now my stock is huge. You know the turnover of Priya sarees? How much is it? 500 crores per day. So I'll have huge stocks. Per day 500 crores means I should have some good stocks also. Correct? No? So on an average, I will be having stock of around 50,000 crores. A 500 crore per day, at least for 90 days sales, 100 days sales, stock should be there. No, I have a stock of how much, sir? 50,000 crores. Now I have taken insurance on my stock. If I take insurance on my stock, for one company to pay me the money of 50,000 crores will be huge. If stock something has happened, damaged. Okay, it may happen. Or I may only do like that. If some stock is not getting sold, correct? I'll get at least money from insurance company. Correct. So I may take money from insurance company only. To take money from insurance company, I may only burn those stock. Possible. Anything is possible. So for one company to take a risk of 50,000 crore is very huge. So what will that insurance company do? They will share their risk. Let us say I would have asked Tata Group to do an insurance. Tata would have approached SBI. Tata would have told SBI, see SBI, for me this is a huge risk. If I take insurance, it is a huge risk for me. Why don't you become co-insurer? Co-insurance means, you know, co-owned property means one single property having two owners. Similarly, so for one single item, how many people are giving insurance? 2 or more people are giving insurance. Wherein, whom did I discuss with? I had the discussion with Tata. Now Tata went to SBI or ICICI or HDFC. That is their headache. Okay. So here in this co-insurance scheme, whatever insurance premium I am going to pay, I am going to pay the premium to Tata. Correct? And Tata is going to pay premium to SBI. So the question is, for let us say the premium comes to 100 crore rupees, which I have to pay to Tata, and Tata has to pay a premium of 60 crore rupees to SBI. So the question is, on this 100 crore rupees, because Tata is giving services to me, they would have charged GST. Now the question is whether the services which is taken by Tata from SBI, for which 60 crores is the insurance, whether GST is applicable on this or not. Whether this transaction is treated as supply or not. Lawmakers have told, normally yes, it is treated as supply. Right? You are taking insurance, but lawmakers have told no, this transaction is not treated as supply because you are taking insurance on same product on which GST is already paid. So the condition is that Tata should have paid GST. Then only for SBI it is not a supply. I'll repeat. This is called as co-insurance. Insurance company does not bear the full risk of the insured party, and thus it apportions the risk between multiple insurers, and those are called as co-insurers. Since GST is already getting paid on the first leg between insured party and insurance company, I am the insured party and insurance company for me is Tata, there will be no GST for second leg of insurance company to co-insurance. Okay, so for the second transaction between insurance company and co-insurers, there will be no GST. It is not considered as supply. Condition is I should have already paid the taxes. I in the sense Tata should have already paid the taxes. Now comes the reinsurance. This is co-insurance for same two or more people. Reinsurance means what, sir? Air India took insurance from Tata. Tata took insurance from. Now Tata is not sharing the risk. Hey, this was case of sharing the risk. Here they are directly telling my risk I am transferring to someone else. I am taking reinsurance. So in this case also, see, if you are an insurance agent, and if you find, and for an insurance company, if you find some person to whom you can sell insurance, the insurance company will give you commission. Correct? The insurance company will give you commission. Let us say I told the Tata group that please insure Air India aeroplane. So for which insurance premium is 100 crore rupees. So Tata group told, very good Dilip, I'll give you 1% commission. So I got 1 crore rupees as commission. Now similarly, can I say for foreign insurance company, Tata is also giving that services only? Basically, Air India, which is there, it took services from Tata group, but Tata transferred its risk to foreign insurance company. So can I say for foreign insurance company, Tata is like a commission agent only? Just like Dilip, it is like a commission agent. So now here, this foreign insurance company will pay commission to Tata Insurance, correct? It will give a commission to Tata Insurance. For this commission, there is no GST. Lawmaker says this is not a supply. For this, there is no GST because it is a case of reinsurance. Condition is Tata should have already paid the GST. Meaning the first person should always have paid the GST. Then only the second or third person should not pay the GST. Insurance company sells the risk to other reinsurance against consideration, called as ceding commission, for giving client or business to the reinsurance company along with other services of documentation, paperwork, everything will be taken care of them by the Tata group only. This is not treated as supply and therefore there is no GST. RCM ka new entry we have seen. Okay, what we have seen, sir? Services given by way of renting of immobile property other than residential. We have seen this. Now here, if you remember sponsorship services, here there is a small change. Sponsorship services, do you remember? Sponsorship services given by any person other than body corporate to a body corporate or a partnership firm. Now in the material, they would have written it as any sponsorship services given by any person to a body corporate or a partnership firm. But here there is a small change. Sponsorship services given by any person other than body corporate. This is the only point added. Meaning, you remember our example was Saima giving services to whom? Nexa. Nexa had given sponsorship, correct? No. Saima giving services to Nexa, for which? Now Saima, if it is a body corporate giving services to another body corporate, no RCM. But if Saima is not a body corporate, Saima is just another individual HUF firm, AOP, etc., giving services to Nexa, yes, RCM. Okay, so the service provider should be any person other than body corporate. This one point is there. Now normally, like we have here, BBMP is there in Bangalore. In Bangalore we have BBMP. In Chennai we have Greater Chennai Corporation, something like this. So similarly in Delhi they have Delhi Development Authority, DDA. Okay, like in different states they will have their own corporations. Correct. So the question is whether corporation is local authority. What do you mean by local authority? Is corporation like BBMP treated as local authority over here? Lawmaker says no, BBMP is not a local authority. Clarification whether Delhi Development Authority can be treated as local authority under GST law. Delhi Development Authority is not a local authority. Okay, because they are doing business. They are doing business. Now, section 9 subsection 1, section 9 subsection 1, if you remember, it says what, sir? Subject to the provision of subsection 2, there shall be levied a tax called as central goods and services tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption. Correct? Something like this. Correct? This point says. So here they say, they have added one point. GST shall be levied on intrastate supply of goods or services or both, except on alcoholic liquor for human consumption. This was the normal point. And undenatured, extra neutral alcohol or rectified spirit used for making alcoholic liquor for human. So for making alcohol, they add something else also. On that also GST is not applicable. They have added. In time of supply concept, now this is a change which we have not discussed in the classroom also. Now, what happens in time of supply cases? RCM. Time of supply cases, RCM of services. RCM of services, who has to pay the taxes? Of course, recipient has to pay the taxes. What is the time limit? What is the time of supply, sir? Date of making the payment or 61 days from the date of supplier invoice, whichever is earlier. Something like this we have studied. Date of making the payment or 61 days, whichever is earlier. They have added one more point. Now, in case of RCM, I as the recipient have to issue an invoice. For myself, I as the recipient have to issue an invoice, because based on invoice only I can take input tax credit. You remember, input tax credit, one of the condition is you should have possession of tax invoice. I can take input tax credit only if I have possession of tax invoice. Now, for RCM purchasers, that supplier will not give the invoice to me. Legal services are taxable under reverse charge. Advocate will not give an invoice to me. So how will I take the input tax credit when I don't have an invoice at all? I myself should give the invoice to me. Okay. Time of supply, I mean, in invoice, tax invoice, debit note, credit note chapter, that point is covered. That I should myself give invoice, invoice to me. Okay. Now, based on the document, I can take input tax credit. This is also covered under input tax credit chapter. Now, because I am myself giving an invoice to me, I will take that date. Normally, we take date of payment or 61 days from the date of supplier invoice or document issued by him, or date of issue of invoice by the recipient himself. And the law says that the recipient has to issue the invoice within 30 days of receipt of goods or services. So I should issue an invoice to myself, and based on that, I can take input tax credit. Input tax credit, ITC on automobile sector. Whether ITC can be availed by dealer only after the vehicle are physically received by automobile dealer at his business premises, or ITC can be availed on the date when the vehicle is billed to him and handed over for transportation. The question is, see, normally what happens is I should have physically received the goods. But in case of automobile, what happens is, automobile means car, this thing and all. Now a dealer is purchasing the car, he may not have space to keep all those cars. So normally what they do is, the car will be in transit, or it will be kept at some godown or some place which does not belong to me, which will be belonging to the manufacturer only. Now, though I have not actually received, can I take input tax rate on those goods? Goods, sir. Lawmaker says, as soon as you are giving the cars to transporter, for transportation, you can take input tax rate based on the bill. Now, this point is with respect to this RCM point. Now, section 47A has been added, which says if the supplier is an unregistered person, if the recipient is a registered person, and if the services are taxed under 9.3 or 9.4, which is nothing but reverse charge, the recipient has to raise the invoice within 30 days from the date of receipt of goods or service. Following unregistered person shall first obtain unique enrollment number before generating invoice. Now, normally, please note, who can generate invoice? Who should generate invoice? The person who is causing the movement of goods. Correct? Movement of goods can be caused by supplier, recipient, or the transporter. Now, sometimes the supplier is unregistered person. Can unregistered person generate e-way bill, sir? Normally, because I am not registered, I will not be able to generate e-way bill. They are telling, no problem. If you are an unregistered person and if you want to generate e-way bill, you can still generate by obtaining a enrollment number called as unique enrollment number. So by obtaining unique enrollment number, even an unregistered person can generate the e-way bill. 10.1c, we have discussed this point. I mean, previously we have discussed return under GST. GSTR 7 is the return which is recorded filed by a TDS person. For this, the due date is what, sir? 10th of next month. Now the question is, sir, what if I don't have any payments at all in this month? Should I still file the return? Lawmaker says, even if it is a nil return, it should be filed on or before this date. So only this point has been added. From exemption, that point we have covered, that National Council of Vocational Training, that is covered. Now here, this point has been newly added. Services of insurance provided by Motor Vehicle Accident Fund constituted under Motor Vehicle Act against contribution made by insurers out of premiums collected from third party insurance motor vehicle is exempt. This is all about the amendments which are there, or the new points which are there under income tax as well as GST. And I think mostly we have covered everything during our classroom only. There is nothing something which is new, which we have not thought. Anyone has any question on these amendments? We'll start marathon. Yes, sir. AC, you want to? You're doing something, no, sir? Okay. Okay, I'll stop this recording and we'll start a new recording for marathon. Okay, we'll meet after 1 second.